Hello, trading has closed on the 16th of May, 2014. I'm Jeffrey Tennant. Let's discuss what happened Friday in the market. Thursday was a huge down day. After the close, I said I was looking for higher prices on Friday. I said if we were going to drop at all, we would have to take out this low, ideally by gapping under it. We didn't take out the low, so the call was for higher prices. I did say I would like the mejt target of 1866.43 to print. It did, and we had a target for the rally of 1875.03 plus, and that printed too. There is typically support under lower mejt targets, and there was under this one. There is typically resistance over higher mejt targets, so we have resistance over this one. There is resistance from a different pattern based on somebody else's work too. I'll come back to that in just a minute. I would like to give you an update on the software. The program has been completed and will probably be available sometime in June. If you see at the end of yesterday's trade, this line separates Thursday from Friday. At the end of Thursday's trade, the system had shown you exactly what prices were forecast to trade on Friday. It identified the old mejt target of 1869.25, which was satisfied earlier in the day. The target was a failed target from earlier, and that's why it has a red dot. When the prices forecast for Friday printed, they were identified by white dots. There are no new numbers showing up, so a user of the software knows there aren't any new patterns or any new mejt forecast for Monday, but the software also shows we have a failed target of 1894.56 and a failed target of 1859.78, each of which is favored to print at some time. Let's see if we can come up with a prediction for Monday. We're at resistance, but resistance isn't obliged to hold. There are a few positive things in the market. One is we had an early drop. We rallied all day long. Typically that's a positive pattern, and you get follow through the following day. It's also bullish to rally all day Friday. It almost always carries over into Monday. The longer term pattern isn't so good. The green letters on the green numbers on the weekly chart show we have 11 bars of a combo sell signal from Tom DeMark. You need 13, but the last 3 bars don't have to obey all the rules. So these 2 bars with X's, which had higher highs than each of the previous 2 bars, they technically qualify. So it's possible we have 13 bars and a weekly sell signal from Tom DeMark. This can lead to a decline that can last weeks, but it doesn't tell us anything about Monday. Let's look at this chart. This is a half-hour chart. This is a pattern I call a diamond on stilts. Here's a stilt move up, a stilt move down. You only need half of the diamond, and there's the half. The typical occurrence with this pattern is you have support at the origin of the left stilt. The first challenge of that origin typically holds, and the second challenge is typically a big failure, which would mean a big drop. This first challenge did not hold, but we have moved over this consolidation. We're now at the origin. To me, I think this will hold unless it's reversed early Monday. We have these gaps. Typically the market likes to consolidate in an area of a gap. Usually it'll gap down first or gap up first and then consolidate in the area, but it's okay if we consolidate and then have the gap later. One could argue we have enough consolidation already, and if so, we're not going to get too far. But I'd like to see more consolidation at the highs. I think there's an argument that we could re-challenge the low of the diamond in the 1890s. We also have another stilt. This is a diamond. It's a lopsided diamond, but it's a diamond nonetheless. And we're starting to have a stilt move up. I think it's possible we can complete this stilt and go to the low of the diamond. Let's go over the plan. I think the most likely scenario is that we have a stilt-like move up into the 1890s, even though the long-term pattern to me looks pretty negative. However, if it fails, it should be obvious at the open. This is a resistance area, and if we don't get such a stilt move up into the 1890s, I think the next most likely scenario is a sharp gap down with a big drop. It's pretty hard to make a trade based on either of those predictions, but the whole picture should be clarified significantly before Monday's open, and that's today's call.